In this video, we will look at the hanging man pattern. It's the same as the hammer pattern. The only difference is the hammer comes after a downtrend and the hanging man it comes after a uptrend. The hanging man is a bearish reversal pattern. This is a daily time frame chart of Chevron company. So let's look at what are the conditions to identify correctly a hanging man. The first condition is it must come after a uptrend. The second condition is it must have a small real body. The third condition is that small real body must be near the high of the candle. The fourth condition is the small real body can be of any color, green or red. The fifth condition is the height of the lower shadow must be at least twice the height of the real body. So almost all of the rules that we apply for the hammer apply to the hanging man. The only difference is the hanging man comes after a uptrend and the hammer comes after a downtrend. So this is how you identify the hanging man pattern. Now what are the nuances of this pattern? Number one, the high of the pattern does not become resistance. Okay. Number two, you are not allowed to take a trade on the hanging man, which means you can scale out of positions on the hanging man. So for example, if you bought somewhere in this area, this is a hammer, okay? If you bought somewhere in this area, then this is the right time to take a partial exit or exit, but you are not allowed to initiate a trade. The only time when you are allowed to initiate a trade is when you get price confirmation. Price confirmation means if the next candle closes below the close of the hanging man, then you are allowed to take a trade on that pattern. Okay, so those are the nuances of the hanging man pattern. So let's see what happens next. Remember, this is a bearish reversal pattern, which means there are two possibilities after this candle comes. It will either go flat or it will go down, but the chances that it will go up are very low. So let us see what happens next. Well, it goes down, flattens out, and then starts to go up. So for quite a few days, this is a daily chart. For quite a few days, I think almost a month, that hanging man acted as resistance. So it's a bearish reversal candle pattern. And if you notice this candle, the close of the candle is below the close of the hanging man, which means people who want to take short positions could have gone short here, taken a short position. But if you look at this pattern, that's a bullish engulfing pattern. You should be out of that trade if you see that bullish engulfing pattern. Anyways, if you want to learn the hanging man pattern in detail, go to this link, check out my Japanese candlesticks trading mastery program, where I teach each pattern in detail. There are 45 candle patterns that you can learn. It might take you 1 year to master these patterns. This program has more than 1000 chart examples. Okay, so pretty exhaustive program, detailed program. Have a look at it. Students from more than 170 countries are already enrolled in that program, so it will help you a lot. Okay, so that's the hanging man for you.